Welcome traders to another educational video titled The Hanging Man. The hanging man is identified at the top of the rally and it has a small body of either color and a long lower shadow. The upper shadow is small, tiny, or in many cases it doesn't even exist. Now, a lot of traders ask me, how is it possible that the shooting star and a hanging man, both of them, to have bearish implications? Well, the reasoning behind the hanging man is that it closes and opens about more or less in the same area because it has a small body. Of course, after it opened, then it falls lower, 2 to 3 times at least the size of the body, and then something happens and it rallies back up where it opened. The fact that the market does not move substantially above the body size, above the body that is, then this fact makes it a bearish candlestick pattern. Of course, the best indicator is a good point now to mention. A good indicator, the best indicator that is price itself. And we're going to confirm this reversal pattern after the price falls below the low price of the hanging man. Then we have a good excuse to place a sell order. But before we do that, let me show you a real chart where we can identify the hanging man. And here we are, after a rally, we identify the hanging man at the top of the rally. And of course, the rest is history. The market falls lower. Now, a very basic strategy, but before we mention that, don't forget to subscribe below, like and comment. At the top of the rally, we identify a hanging man. It's not the ideal hanging man. If you notice, the upper shadow is not that small, but nevertheless, we will qualify it for our example. And it's near a resistance area, which is an additional tool to consider. And so we place a sell order right below the low price of the hanging man, and then we place a protective stop loss just in case right above the high price of the hanging man. Then the take profit area is identified at the 200% level, and this of course implies 1-to-1 risk to reward ratio. Again, this is a very simple basic strategy, and it's just to lay the ideas so you can construct your own strategy. Now, let's improve the basic strategy. We identify once again the hanging man at the top of the rally, and then we place a sell order right below the low price and a protective stop loss right above the high price of the hanging man. Now, the first take profit level is identified at the 200% level. So we're going to close part of our trade at the 200% level, and then we will allow another part of our trade to run lower so we can book more potential profits. Now, when the market hits the 300% level, we're going to close the remaining of our trade. Let's improve this one even further. Again, at the top of the rally, a hanging man, we place sell order right below the low price of the reversal pattern and a protective stop loss right above the high price of the pattern. Now, the first take profit is seen at the 200% level. Again, you can use any percentage or any Fibonacci extension you wish. It's up to you. Choose the numbers, the percentages that suit your trading profit. Now, at the first take profit area, at the 200% level, we're going to close part of our trade, and then we're going to allow the remaining of the trade to run even lower at the 300% level, where we're going to close another part of our trade at the 300% level, and we're going to allow a small part of the trade to run even lower. But when we identify any reversal pattern in the opposite direction, right, like in this case, a hammer, then we're going to close the remaining of the trade. Excellent. One more idea for you. On the left side of the screen, you can see a hanging man at the top of the rally near a moving average. The moving average behaves like a dynamic, as we call it, resistance area in this case. And of course, we open a sell position right below the low price of the hanging man, and we place a protective stop loss right above the high price. Now, there are different ways to take potential profits, and I will present two of them here, but you can also combine them. For example, you can close either all or part of your trade when you identify any reversal in the opposite direction. And here is the case of the hammer in the opposite direction, right? It's a hammer which has bullish implications, and you can close, as I said, part, all of your trade. And then when you identify two closes above the dynamic moving average line, then you are going to close all or the remaining, of course, of your position, of your trade, right? I hope you enjoyed it. Don't forget to subscribe below. See you in a while.